Here's the truth, folks. Americans, we're not just doing stocks. We're not just doing crypto, your Bitcoins. We're looking for every single tax advantage strategy that's out there. And for the ultra wealthy, they're building generational wealth with tax advantage strategies that allow you to accumulate wealth tax free. Well, we're going to break that down. So, ladies and gents, just here to drop a few cents. You're with Earl, the money coach, licensed for the last decade. I want to break this down so you understand the basic tax advantage accounts and going a little bit deeper if you're looking to get from the tax now and the tax later to what we call the tax never kind of accounts. So make sure you like, follow, and subscribe and stick to the end. I'm going to give you guys a lot of key tips. But first, let's talk about the core tax advantage accounts. Now, when we say tax advantage accounts, these are accounts that either down the road you have to pay taxes, so you're deferring it down the road and then may have some solutions where you can minimize those taxes, or you're going to have tax advantage accounts that are going to be able to accumulate tax free. But let's do the core, like your 401k, and then you have a Roth 401k. So a lot of people don't know you have a regular 401k, the Roth 401k that comes with after taxed dollars. So your regular 401k, $200 goes in every single month, tax advantage. Your Roth 401k, at that $200, say 30 goes towards taxes, that 170 gets to go in tax free. And that means all of that's going and is growing tax free. Now, there's a limit every single year. So it's a great strategy, but how many people really max it out? Only 15% of employees actually officially max out their 401ks, and then they can use the match. All right, then you have your IRAs and your Roth IRAs. We already know, just like a Roth 401k, your Roth IRAs are going to be after tax dollars. So you're putting in $500 a month, 450 is actually going towards everything to accumulate tax free. That other $50 is going towards the taxes. But only 14% of US households are actually using that. Then you have your different kind of accounts that are deferred, like a HSA, a health savings account. So you can use it for your health, but that money also gets to accumulate. And that's huge because you get that tax advantage, tax-free in, tax-free growth, tax-free out strategy with your HSA. Look at my description. I actually have a health savings account that you guys could actually use, sign up for, to give you some of these strategies. Now, there's a limit. There's only $4,300 allowed right now for the HSAs, but that always goes and reflects, just like your 401ks, how they go up slowly. Now, you have your different level, those who want to have tax advantage accounts that give them tax-free income and all other kind of things. I'm going to go into them briefly, but let's get into it. One of my favorite, the municipal bond. Okay, just for you guys that know, bond means loan. Municipal comes from the word muni, which means city. So it's a city loan. A municipal bond is used to beautify your city. Now, a good thing is the interest is a federal tax free on your municipal bonds. All right. So often it's state tax free. So that's huge. Now, a lot of them have an effective, what they call an effective yield, which could be a 5% to 7% taxable equivalent for high income earners on these kind of accounts, right? But it still allows them to have a lot of options. So that market's huge. They're right around, I think, $3.94 million or $4 trillion is actually, I'm sorry, into the municipal bond market. Then you have fixed index annuities, which gives you protection against your principal amount that you put in these accounts. So if you have a qualified or non-qualified, meaning if it's not qualified to be taxed, you know you have protection on your principal and your fixed index annuity, and all that money gets to accumulate tax free. So your 100,000 turns into 400,000. That $300,000 of growth, you can start withdrawing tax free. Super huge. Another incentive for people that want to move 401ks into a different strategy, but they're really huge to be able to use, as well as cash value life insurance. Now, a lot of folks don't know you have your term insurance, you have your permanent insurance, but a lot of your permanent have cash value, and the cash value, due to the Internal Revenue Code, the 7702 and the 72T, the 101A, I can name these codes left and right. I'll put them in the description. Allows that money to grow and to be able to loan yourself tax free. Huge, huge ways. And this is what a lot of wealthy folks understand. High income earners understand. I don't want to be limited. 401ks are great. It's a limited amount. You can only put in a limited amount every single year. IRAs are great, but you can only put in a limited amount. If you make too much income, you can't even qualify to put money into a Roth IRA. So high income earners say, hey, I want to have something where I'm not capped. I can get a large lump sum in and let that accumulate, have compound interest that's growing for me, and it could really benefit what my needs are. So the goal for high income earners isn't just making money, it's keeping their money and having interest, so that way they're living off the interest. All right, that's where these tax advantage strategies come in, because it allows you to have these different parameters. So I have clients who are putting in $75,000 a year into insurances. I got clients that have annuities where they put in $400,000, municipal bonds $250,000. It gives them different ways to protect their money, but they're not just limited to a certain amount. You see what I'm saying? And that's huge, folks. So when you start talking about tax advantage strategies and understanding how they work, you got to understand you don't just look at your retirement. You want to make sure I'm looking at generational wealth. How can I access those funds? Because that's what a lot of people don't understand. They have these accounts, they're growing this money, but when they start to access these funds, that's when they may have penalties, required minimum distributions. They may have gone over that. So now they have a higher penalty. They're going to have penalties, fees, taxes, all these things. Well, guess what? Old school saying they always say is what? You don't want to pay on the actual harvest, you want to pay on the seeds. And that's what high income earners are doing. They may pay a little bit up front, but then everything else gets to grow tax free. While most people do what? They pay nothing up front, nothing for the seeds, and then they're paying for the whole harvest down the road. So when you start talking tax advantage accounts, there are two levels. Like I say, there are levels to this. There's two levels to your tax advantage accounts. So do you want it to just be so you have tax advantage accounts that are deferring to later and then possibly, be in a lower bracket, or use different strategies to have the different ways you rolling that money out? Because you have rollovers and you have strategic rollouts. When you have some of these tax advantage accounts, you could do strategic rollouts to minimize the taxation you have. So you could do that route. I'm not saying nothing's wrong with that. You could do that route, or you could have other tax advantage accounts. You have your Roth IRAs, you have your municipal bonds, your insurances, your annuities, ETFs, a lot of different things out there where you could have funds and watch the funds actually accumulate, have a higher yield, have a higher interest rate. We always talk about the rule of 72. Take the number 72, divide it by an interest rate. That's how long it takes your money to double. A lot of these accounts you see 8%, 9%, 10%, they're averaging. That means every 7, 8, 9 years, your money is doubling instead of taking 20, 25 years. When's the last time you've seen your 401ks double quickly in 4 to 5 years? A lot of times it takes a long time. So if you want to know more about tax advantage accounts, make sure you like, follow, and subscribe. Reach out to me. I could talk about setting some of these up. If you're looking for health savings accounts, check the description. You could get a health savings account right there, HSA, or if you want to have a scheduled consultation with me, we could talk about moving your funds over, getting bonuses for moving your funds over, but most importantly, what tax advantage accounts are right for you. Everyone has different tax advantage needs. Everyone has different tax advantage wants. So you need to make sure the right ones for you, because one size doesn't fit everybody. So with that being said, ladies and gents, just here to drop a few cents. You're here with Earl, the Money Coach, and I'll see you on the next video.